Wonderful, and we've kind of been plugging different bills that have come up. I'll plug my own. I introduced a bill last cycle that dealt with the standard of review for CFPB bills when they go to FSOC, giving our credit unions and small banks a louder and bigger voice to have those rules reviewed. You all supported that, and we're going to hopefully get some support behind that bill again, so a shameless plug. I know you all agree that our credit unions are burdened by regulation, right? But can you come to us today and say, listen, yes, there's new burdensome regulation, but our institutions are far safer and sounder because of this new burdensome regulation? Is that the case?
No.
I can't honestly say yes to that. I mean, I don't.
You are safer or you're not safer? I mean,
I can't say that I'm any safer.
Okay. But that aside, are your families and your small businesses treated in a much fairer way now that you have these new rules and regulations and hoops to jump through? No?
Go ahead.
You were treating them fair from the start, right?
We were fair before, I guess.
Yeah,
That's my point.
We're credit unions. That has never been an issue.
I might say that they're treated less fairly because we're spending more time on regulations than we are helping them and working with them directly. And resources are diverted, that sort of thing.
And I think that's an important point, that we really have to focus on new rules and regulations that haven't made you any safer, any sounder, and haven't helped the clients and the families and the small businesses in which you serve. It's actually made it more difficult for you to serve them. I mentioned in my opening statement that I was concerned about consolidation. And I don't know if you are seeing, I see that in Wisconsin, I don't know if you're seeing that around the country. Do you see that coming? If you're seeing that, do you see it coming from the new regulatory burden, or is something else happening that's causing this consolidation, Mr. Earl?
I have an example I think might fit what you're talking about. About a year or so ago, National Credit Union Administration came to us and said that there's a very small credit union in Glendale, Reynolds Memorial Hospital. Chairman is very familiar with that credit union, I'm sure. And they were not in financial trouble. They had good capital. They did everything right, playing by the rules. But you're talking about a staff of one, maybe 1.5. And they basically said, we can't keep up anymore. We can't do it anymore. We got to find a merge partner. And so NCUA came to us and said, would you be willing to do that? And geographically, it worked out very well for us. But they didn't quit being the credit union because they wanted to, or they weren't doing a good job. It just couldn't keep up anymore. And so to me, there's an example of one less credit union out there simply because of the regulatory environment we're in. The one size fits all doesn't work.
If I may add, my colleague referred to it as a conveyor belt of regulatory burden. I think of it more as a treadmill. I'm constantly running, trying to keep up, and I live in fear that perhaps we're not in compliance because there's not enough of us to handle that.
And I think in my district, the average is 10 employees. I mean, we're small, and not one person can even specialize in the compliance part.
At our credit union, we have 50 employees, and I would say that every one of them spends at least a portion of their workday complying. It's a tremendous burden, and the members, by and large, are not deriving a lot of benefit from it.
If I can just ask one question, I only have a minute left. If you could pull a bit of fairy dust, bipartisan fairy dust, out of your pocket, and get people to work together in Congress, House and Senate, I know you've all indicated several things that you'd like to have happen. You've given us a list. But it's hard to get people to agree to move anything. But if you were to give us one message to go, if you guys could do one thing, move this one bill, it would give us the greatest mileage. And I know you said, listen, it's a pile-on effect. It's all the different rules. It's hard to identify one, but you're not going to see, well, I hope we would see a lot of bipartisanship, but if you could say, hey, get this done for us, get this one thing, this is the greatest mileage that we would get. If you guys would all give me one thing that could happen. Mrs.
I'm ready.
Oh, go. I can tell you're ready.
Supplemental capital would be very, very helpful for us. You know, we have one way to raise capital, and that's the retained earnings. in a month's time, a big change can happen in an institution. For instance, our General Motors employees received profit-sharing checks to the tune of about $7,000 last month. Our assets rose $2 million, and we dropped almost 70 basis points in net worth. We have no way to raise supplemental capital, and NCUA is not very, they don't have a lot of, there is no flexibility with PCA requirements.
Okay, and I'm over tempo. Can you kind of just get a quick answer from everyone before we go?
Yeah.
Mr. Rose?
Exempt credit unions from CFPB regs.
Good.
Yeah,
Sure.
I agree with that
Agree?
one.
Okay, I yield back. Thank you.